Welcome back to the deep dive from Cash Therapy Official. Okay, today we're tackling something huge, really getting into the weeds on a core problem in finance right now.
Yeah, it's this feeling so many people have that the old financial advice, it just doesn't work anymore. It feels like a trap.
Exactly. And worse, these totally chaotic, like viral bets you see online, they start to feel strangely logical. It's bizarre.
It really is. And that dissonance, that contradiction, is what some of the sources we're diving into today call the great risk lie.
The great risk lie. Okay, let's unpack that thesis right up front. What's the core argument?
Well, the argument is pretty provocative. It's that the financial industry's single greatest product isn't some complex investment vehicle, it's confusion. Specifically, confusion about risk.
Confusion about risk. How so?
They've made risk seem utterly terrifying, completely unknowable for the average person. And when you're confused and scared, what do you crave?
Certainty. You just want someone to tell you what to do.
Bingo. Yeah. And that's what they sell you, that certainty you're desperate for. It might be a financial plan, maybe a secret stock tip, or, the latest AI trading bot.
Ah, the classic bait and switch. Create the fear, then sell the cure.
Precisely. So our deep dive today is really about this tension between two sets of, frankly, broken promises. You've got the old guard myths.
The stuff we all grew up hearing.
Right. And then the new guard fantasies promising some kind of magical escape route.
Okay, let's start with the foundation then. The old guard. That familiar script, right? Get the job, buy the house.
Put 10% in an index fund, retire at 65. You know it. But the sources we looked at argue that whole 50-year plan, it was effectively taken out back and shot sometime in the last decade.
Especially after 2020, 2022, things really shifted.
Massively. And the people who followed that script, the sources called them financial refugees.
Financial refugees. I like that. They played by the rules, but the game changed on them.
Exactly. Let's look at old myth number one, the gospel of just be patient. Classic buy and hold.
The ultimate safe advice. Don't time the market. Just wait it out.
Yeah, you didn't need to be smart, just patient. But then inflation rockets up to, nearly 9%. Suddenly that patient money, that safe cash sitting there.
It's guaranteed to lose value. That 9% inflation means your safe money lost 9% of its buying power. Just like that.
And that's the gut punch. The strategy designed for no risk became a guaranteed loss. You're suddenly forced to take on risk, any risk, just to try and keep up with inflation. People feel betrayed, and honestly, rightly so.
Which leads straight into the next myth, doesn't it? Old myth number 2, the golden handcuffs.
Ah, yes, the comfortable idea. Your house is your best investment, your biggest asset.
Sounds great on paper, but the sources ask a really sharp question here. What good is wealth you can't actually use?
Right. It makes the asset, your home, feel like a kind of golden cage. You might be house rich on paper,
but you're cash poor in reality. You can't pay the bills with bricks and mortar.
And think about the dilemma if you do need that wealth, say, for retirement. Accessing it means selling your home, selling your shelter.
It's not like selling stock. It's a massive upheaval.
Exactly. You either have to downsize drastically, maybe move somewhere much cheaper, or you sell and buy something smaller but potentially just as expensive, maybe even more so depending on the area. It creates this huge liquidity problem for your biggest asset.
And the system doesn't really offer an elegant solution for that.
Not really. Okay, then there's the third crumbling pillar, the morality trap.
Which is?
The idea that debt is evil. Be frugal, pay off everything, cut up the credit cards, live debt-free. It sounds virtuous.
It does sound like the right thing to do.
But then you look at how the actual system works. The government, printing trillions.
Yeah.
Corporations, using debt constantly to grow. The wealthy, using low-interest loans for investments. The whole machine runs on leverage.
So if you're the one person diligently avoiding all debt on moral grounds...
What happens? You end up, inert.
Yeah.
You have no leverage, no capital ready when an opportunity comes along. You basically become, as one source put it, a spectator, not a player.
Watching the game from the sidelines because you thought debt was inherently bad.
In a game that's entirely about using debt strategically, the moral high ground keeps you out of the action.
Okay, so let's recap that shift. The safe investment route is now a guaranteed loss thanks to inflation. Your safest asset, your house, is a cage you can't easily access. And the moral path of avoiding debt makes you a spectator.
That's the perfect storm. And it creates that financial refugee, someone lost, maybe a bit angry, and definitely desperate for any way out.
And that desperation, that's where the new guard comes in, isn't it?
Unfortunately, yes. That desperation is exactly what the modern guru is looking for.
Which brings us neatly to section 2, the seduction of frantic fantasies. The idea here is that if you're that refugee, you'll listen to almost anyone promising an escape.
Even as one source put it quite sarcastically, the guy in the rented Lamborghini, the promise is just too tempting.
So let's look at these new myths. New myth number 1, the digital savior, the guru.
All right, these aren't your old school stockbrokers, they're selling lifestyles.
Yeah.
7 streams of income, the millionaire mindset.
They pitch it as the new reality. The old rules are dead, they say. Now it's all about hacks and leverage, not slow, hard work, effortless wealth.
But the irony, oh, it's thick. Often they're just repackaging the same old snake oil. Guaranteed returns, get rich quick, just in a slicker digital bottle.
See, these courses, right, a $500 course teaching you how to sell a $500 course.
Exactly. The leverage they're really teaching is how to build a sales funnel for the promise of leverage. It's quite circular.
Okay, what about new myth number 2? This one feels very current. The AI gold rush.
Ah, yes. NVIDIA. The Mag 7 tech giants. You look at those stock charts, often just going straight up. It feels logical, compelling.
Especially with the narrative, right? AI is the future, it needs chips, NVIDIA makes the best chips, seems like a sure thing. Selling shovels in the gold rush.
It's a powerful story. Everyone seems to agree on it, which makes it feel safe. But the critical question the sources raise is this a genuinely new paradigm? Or is it just
the 1999.com bubble, but with, much better graphics cards this time?
That's the fear. And the real risk identified isn't necessarily that AI itself will fail. The risk for the person jumping in now, the listener maybe,
is that you're buying at 2040 prices today, you're way late to the party.
Which brings up a crucial term, exit liquidity. We need to be clear on this.
Okay, what is it?
The folks who bought NVIDIA or similar stocks 2, 3, 5 years ago, they made fortunes. Now, they might be telling you, the financial refugee, quick, get in, it's still early.
But you're not early anymore.
You're potentially their exit. You're the person buying the stock at these incredibly high prices, allowing the early investors and insiders to cash out their massive gains. You provide the liquidity for their exit.
Ouch, that's a sobering thought. Okay, final new myth, number 3, the rebellion, sponsored by Robinhood.
Yeah, this refers to that whole Wall Street bets, GameStop phenomenon. It's felt amazing, right?
Yep.
Retail investors sticking into the hedge funds.
It had a real David versus Goliath feel. Very anti-establishment.
Absolutely. But the sources argue the system absorbed that rebellion incredibly quickly. It took the energy, gamified it, and basically turned the market into an even faster, more accessible casino.
Still run by the same house, essentially.
Pretty much. And the specific danger here is mistaking pure luck for skill, or even genius. Someone makes one wild bet on a meme stock, it pays off.
And suddenly they think they've cracked the code. They're the next Warren Buffett.
Right, so they take those winnings, maybe more, and bet it all on the next sure thing. It becomes a gambling problem disguised as investing savvy.
So that initial spark of rebellion kind of fizzled into just more gambling, but maybe more democratized gambling.
You can put it that way. Okay, so we've looked at the broken old guard system and the seductive but maybe equally broken new guard fantasies.
Now we need to get into why. Why do we fall for this? Why do our brains swing so wildly between extreme fear and extreme greed? This is the therapy part, right?
This is the core of the cash therapy, understanding the psychology. Because the system absolutely exploits our built-in vulnerabilities. Let's start with bias number 1. We are fundamentally biologically allergic to saying, I don't know.
Uncertainty is uncomfortable, really uncomfortable.
It's more than uncomfortable. It's physically painful for our brains. Not knowing feels like chaos. So what happens? A bad answer delivered with absolute confidence.
Feels better than admitting nobody really knows.
Precisely. It's more comforting than the terrifyingly honest truth. Nobody has a clue. We crave certainty, even if it's false certainty leading us off a cliff.
Okay, that makes sense. What's bias number 2? You said this one might be the most toxic.
Yes, it's that we worship hindsight. We look back at someone who bought Amazon stock in, say, 1997, and we label them a genius.
And then we kick ourselves for not doing the same. It was so obvious.
But it wasn't obvious at all. Financial history gets massively edited. For every Amazon, there were thousands of companies, remember Pets.com, that seemed just as promising, but went completely bust, wiping out investors.
The system hides the losers.
Exactly. It presents the massive successes as if they were simple, rational choices anyone could have made. It makes winning look like solving an equation, not like winning the lottery.
Which is incredibly misleading. And the irony here.
Oh, the irony is brutal. The sources point out that the safe advice, just buy and hold the index, would have guaranteed you missed the biggest home run stocks in history. those 1000% winners. The system kind of sets you up to fail either way.
Damned if you do, damned if you don't. Okay, bias number 3.
We confuse knowing with controlling. This is so common now with online information.
You mean like watching hours of YouTube videos about AI chip manufacturing?
Exactly that. You do all this research, you learn the jargon, you understand NVIDIA's supply chain maybe, you feel incredibly informed, incredibly smart.
Like you've got an edge.
Yeah, that knowledge becomes like a psychological security blanket. It tricks you into thinking you've turned pure gambling into a calculated strategy.
But knowing everything about the company's tech
Gives you precisely zero control over its stock price. That price is moved by massive global capital flows, algorithms, sentiment, things far beyond your detailed knowledge. You feel smart, but you're just as exposed to the whims of the market as anyone else.
Wow. Okay. So we've gone through the old myths, the new myths, the psychological traps. Where does that leave us? What's the actual prescription here? What's a takeaway from this cash therapy dive?
Well, this is the tough part. The sources are pretty clear. They cannot give you a specific plan. They can't give you the secret no-risk strategy.
Why not? Isn't that what everyone wants?
Because seeking that magic bullet, that ultimate certainty, that's the trap itself. If you came here hoping we'd reveal the secret.
Well, the secret is that there is no secret.
So, what then? The most honest assessment, stated plainly in the material, is nobody knows anything. Seriously. The entire financial industry, from Wall Street suits to YouTube gurus, is essentially engaged in a high-stakes, incredibly complex guessing game. They just dress it up better than others.
Okay. Is there any useful advice then?
There is one piece of, let's call it genius advice, that cuts through all the noise, it's consistent across the sources. Practice some humility.
Humility in finance.
Yes, acknowledge that nobody, not you, not the experts, nobody truly knows what's going to happen next. The future is uncertain. Accept it.
So what does that mean for the listener, practically speaking? What's the goal if you can't win or find the secret plan?
The goal, according to this analysis, shifts. It's maybe less about winning the market, especially right now. It's more fundamental. Don't let the market's inherent psychosis, its wild swings between fear and greed, become your personal psychosis.
Fix your mind before you worry about fixing your wallet.
Essentially, yes. Because the wallets, as one source Riley noted, are probably screwed anyway in this environment. The mission is mental resilience against the financial noise machine.
That leads to a pretty cynical but maybe realistic final thought from the sources, doesn't it?
It does. It's the final punchline, if you will. No matter what happens, whether the old guard advice keeps failing or the new guard bubbles eventually burst, the financial system has engineered one truly successful outcome.
Which is?
They've managed to eliminate the risk of them not getting paid.
Wow. Okay. Let that sink in.
Yeah. Think about it. The confusion they manufacture, the constant churn between strategies. It ensures they always get their cut, their fees, their commissions, whether you're dutifully buying index funds or frantically trading meme stocks.
So if you're tired of the noise, tired of the confident predictions that never pan out,
then maybe you're ready to just acknowledge the chaos. Stop pretending research gives you control it doesn't. See the game for what it is.
and then you can decide with open eyes how or even if you want to play.
Exactly. It's about regaining your own mental clarity in the face of overwhelming financial noise.
Powerful stuff. If this deep dive into the great risk lie resonated with you, and you want more analysis that cuts through the usual financial hype and nonsense,
then we hope you'll subscribe to the deep dive right here on Cash Therapy Official.
we'll be back next time with another deep dive. Thanks for listening.